Thanks for joining us today. I'm really excited. I'm Leslie Shields. I own the Shields Agency, and we do employee benefits as well as Medicare and individual health insurance. And we like to bring you guys this information and have guests on that bring our small business owners some helpful information. So we have Katia Wong, and Katia and I are in a networking group together, and I've been really, really impressed by just some of the things that she talks about that I didn't even know were options, and I bet you guys don't know that they're options either. And so I'm going to let her introduce herself and then talk a little bit about some tax strategies. And I know we've had a bookkeeper on before, but she was not a CPA and not able to talk about the things Katia can talk about and has the knowledge in. And so we wanted to bring you guys that information as well. So Katia, you want to introduce yourself and kind of
Hi, Leslie.
get the ball rolling?
Thank you so much for having me. I'm Katia Wong with EW CPA Tax and Bookkeeping. I am a CPA enrolled agent and a certified tax coach, which is a designation specifically for tax planning. And I've been working in a tax field for a little over 11 years and also bring experience in tax planning. As I said, I've been doing it for a few years now and really enjoying doing it. Mostly, I love that for the reason because I help small business owners and families to save on taxes and pay less taxes that they would otherwise if they don't do tax planning.
Yeah.
So I really enjoy doing
And
that.
the big
I'm
guys get
passionate
it.
about
So
it.
why shouldn't the little guys get it too, right?
Absolutely. I love to say, why would you pay it if you don't have to pay it? Like you have a bill at the end of the year. You can do something now not to have to pay that full bill.
I know.
Absolutely.
I know. And we have a call with Katia. I think we're going to try and do it in August to work with her with our multiple small businesses as well. So we're excited to learn more because I feel like, and I think a lot of small business owners run into this, is that we ask our CPA for strategy and we don't get much back in terms of strategy. And I think it's because, I mean, maybe you could speak
I'll
on
tell
this
you
too,
why.
that most CPAs are not strategists.
Absolutely. So this is one of the reasons. There are a lot of absolutely amazing CPAs out there, and even people, even tax professionals with no licenses. There are a lot of amazing tax preparers there with years and years of experience. However, they don't specialize in tax planning. So the common things people do in the industry is just filing tax returns, and that's a seasonal work. We have a winter tax season that runs January through April, and then there's a second wave that is coming up about now, September and October, the extended filing deadlines. But that's a tax preparation. That's not tax planning. If you want to save on taxes, it doesn't matter how small your business or your income is. If you are not in a business but W-2, there are things that you would want to do before year end, because once the year end, you're in a tax season, there's absolutely just a limited amount, if any,
you can do
during a tax season, because we can't go back and correct
purchase
things
something
if they already happened.
we
can't go back in time.
The year's gone.
I wish I could, trust me.
Yeah, absolutely. So she's got a slideshow and she's going to walk us through a couple of things this morning, and you guys are going to love this. I know, I hope we get comments back, because I went, what? The first time I heard this, I was like, we have to have her on. I want to talk more about this.
All right. So
kids. I'm so excited. Let's talk more.
So today's topic is employing your kids, smart tax strategies for families. This is absolutely an amazing opportunity for families that have kids. And also, I'd like to say it's not just for the tax strategy. It's also for the future of your kids, for investment purposes, for future retirement planning. We're not going to talk about investing in certain things. We're going to talk about what it means from the tax side to employ your kids and how it can affect not just your tax bill, but also the future of your kids in terms of saving for their future.
So we'll probably have to have a financial advisor on to talk about the rest of that.
Yes. And that would be a good opportunity to talk about further about that. A little disclaimer, guys, this is not a tax advice. If you'd like to explore more of this or any other tax strategies, please consult with your tax advisor, or I'm happy to help you. But this presentation is purely for presentation purposes and is not intended to be a tax advice. Just a few words about myself. As I said, I have a CPA license, enrolled agent license, certified tax coach certification. I got my bachelor's in accounting, master of taxation. I've been doing it for over 11 years. I really love it. I love it more working for myself. I used to work for a big accounting firm for 7 years, and then I moved on to open up my own firm. And I am passionate about helping families to reduce their tax bills year after year. Tax planning is not a one time event. Tax planning is something you want to do on an annual basis, especially this year, 2025 is a huge year. There are tax law changes coming. The biggest one since 2017, there was a big tax law update in 2017, and that is expiring in 2025. Some of the new tax law will affect 2025 tax year. Some of them will be effective going forward 2026. Some of the things that are applicable to you right now might go away permanently or be replaced with something else. So be on the lookout for the new tax law changes this year. They are in the proposed state phase right now. Hopefully will be released this summer. They are due to be released around 4th of July. Not sure if that's going to happen, but we shall see. So I'm on a slide, why employ your kids? As I said, it's very, very powerful strategy if you have kids. And as a matter of fact, you can also employ your other relatives. They're just going to be a little bit less tax savings on that side if you go with a relative, with deployment with a relative. But the idea overall is to shift an income from the higher tax bracket to the lower tax bracket. Higher tax bracket is your tax bracket. Lower tax bracket is somebody else. Who are you shifting your business income to, and who is in the lower tax bracket? Kids are a great example because they most likely don't have any income coming in. So if your business is their only job, then the income that they are earning from working for you, that would be their only income. And if they earn up to $15,000, the entire $15,000 on their end will be tax free. On your end, you just ship that 15,000, and all of a sudden you get a deduction basically for $15,000 that is not taxed to you at all. So great opportunity if you're in a higher income tax bracket. For example, if you are at a 37% tax bracket, imagine you're 37%, you deduct that 15,000. And I should have done the math here, but just to give you an idea, $15,000 times 37%, just from shifting that $15,000, you are saving $5,500 in tax. If you're in the 37% tax bracket, if you're in a 24% tax bracket, it's lower. But just to give you an idea, for $15,000, shifting that to your kid. If you have one kid, if you have more kids, then multiply it by how many kids you have, but you are saving $5,500. That's a good chunk of money to save. And also, you're providing for your kids' retirement and saving opportunities for the future. And also, not less important, you can teach them financial responsibility early on. What do you need to know? We are not just paying our kids for doing nothing. It has to be a bona fide employee. It has to be a legitimate work. They have to be age appropriate. So, for example, I would not hire my 5-year-old son to do bookkeeping, tax planning, or anything. 5 years old is not the age for employment in that type of industry. And the earliest age that went through the court cases and got approved by the IRS is 7 years. So I definitely would not go under 7 years of age. But if your kid is 7 and over, that's a great opportunity to think about it and potentially hire your kid. We'll talk more about what your kids can do in your business, but just to let you know, we don't have to wait until they're like a teenage, whatever, 12, 13, 14, or closer to 18. They can be as young as 7 years old to be employed by you.
So I have a friend who owns a children's clothing business, and they employ
Uh-huh.
their kids because they're models, even though
Yes.
they're like two. I don't need a
Yes, and
model,
that's a great
unfortunately.
example. The modeling, yes. The only thing is in your kids, sorry, in your friend's case, that's absolutely would work 100%. If we are talking about, like, for example, in my business, I have a CPA firm, and if I were to hire my kid for marketing purposes, yes, I could pay him, but I'm not going to pay him $15,000. Like, that's going
Yeah.
to be hard for me to
He
prove
could be a
that he's
very
a model.
expensive model.
Yes. Tell me about those photographies,
Yeah.
photography. Anyway, modeling, yes, definitely. But it has to be a common sense,
Yeah.
age appropriate, and then tasks, what they do. Also has to be something that they would be able to do relative to their age. And types of work that can be done, lots of things, guys, are available, also depending on your industry. If we're talking, for example, it's not, I don't think it's mentioned over here, but for example, maybe you have a rental business, mowing lawn, cleaning services in your Airbnbs or rentals. So that can also be done. Also, what I'd like to say is kids don't have to know things, tasks, as they are hired by you. You can teach them, and of course you would, but you can pay for the training, and that would be a tax deductible. So imagine you're hiring somebody, and just outside of the family, if you're hiring somebody with no experience whatsoever, you're still going to teach them. You're still probably going to send them to some training that you would pay for. You can do absolutely same thing for your kids. You can get the course, training, whatnot, pay for it, and also, depending on the age of your kids and maybe their future plans, maybe that could be something that their potential would be interested to continue as a career going forward. So, not only you are paying them for training to do the job in your business, you also would be paying for the training that would be tax deductible and not otherwise if they're not working for you. That would be relevant to their future career. So, really, there's a lot of things that are involved, not just from the tax planning perspective, but also overall when you hire your kids in your business. Let's see. So, what business can hire their kids? Any business can hire their kids. Here, we're talking about the tax structure. The most beneficial tax structure in this case is sole proprietorship or single member LLCs that are taxed as sole proprietorship. Single member LLC is when there is one owner of an LLC and there's no election being made to be taxed otherwise, meaning you didn't file to be taxed as an S corporation or C corporation. Yes, you can be legally an LLC, but you can be taxed differently as an S corporation or a C corporation. So if you didn't file any election, let's say you just open an LLC, didn't do anything, didn't send anything to the IRS to change the election, by default, you will be taxed as sole proprietorship, as if you didn't have an LLC. And why there are best tax benefits here is because when a child is hired by a family-owned LLC, a family-owned sole proprietorship in this case, you don't payroll tax on their salary. Payroll tax is, as you
You
are
missed it.
aware,
I was listening and I had it on mute and I went, what? I don't have to pay payroll taxes on that? That's amazing.
if
I
you're
think I
sole
pay payroll
proprietorship,
taxes on myself.
well, yes, and they can be very, very high. It's basically 15%, 15.3% on whatever salary you pay, but half of that 15% pays the business and half of it pays the employee. So if you put that together, because it's your business, you paying out of pocket and your kid will be paying out of pocket. So you just put those together and that's 15.3%. if you're sole proprietorship, if you're taxed as a sole proprietorship, single member LLC taxed as a sole proprietorship, you don't pay that 15.3% tax. And that's where it's the best tax benefit, but it comes with the cost, of course, because sole proprietorship on its own pays higher tax usually until certain point, until they're started earning enough income
Yeah,
to
I was gonna say, I
switch to
think
an S corp.
we're an LLC that elects to file as an S corp.
Yes, and that's where you can think of, okay, well, I'm not yet ready to
Mhm.
elect to be taxed as an S corp, but what else can be done here? Hiring your kids. There are other tax strategies can be available because, and this is off the topic of here. You don't want to switch to an S corp if you don't make enough net income, because with switching to an S corp, you get additional filing requirements. You got to be on the
Mhm.
payroll yourself. That's a payroll expenses, that payroll
Yeah, we didn't do
tax.
that until probably 3 or 4 years ago. So the first 6 years of my business, I just was LL.
Yes, and because what you want to eliminate it, you don't want to save taxes to pay for all the extra expenses. You don't want to do this to break even. You want to do it to save taxes. Yes, you pay some extra costs that you acquire with switching to an S corp, but you also want to have leftover money in your pocket after doing all of this. I usually recommend at least $70,000-$80,000 net after all of the business deductions. If you're around that range, then it would make sense to switch. The more the merrier, of course, but at least around 70, 80K, you are paying the extra, but you are saving after that extra. And the extra can be, what's the extra? And we are totally off the topic, but anyway, that's very,
That's
very,
okay.
very important since we're talking about,
Yeah.
that's part of the topic anyway,
Yeah.
kind of. You get the separate business tax return that you got to pay for it. If you're
Yep.
sole proprietorship, you are not paying an extra, you don't have an extra tax return for the business because it's all filed within your personal tax return on Schedule C. So then ideally, you want to have a bookkeeper doing your books for S Corp. Yes, you can do it on your own. Most likely, 99%, I'll tell you that in 99% cases, you will be doing it wrong unless you have an accounting background.
Yeah.
So you want to have a bookkeeper doing your books. And also for the S Corp, so C Corp, so partnership, the IRS does require debit credit format for
Yeah,
the
we had
bookkeeping.
our bookkeeper on. I think the one of the very first ones we did on this, and she's. I think at this point, I mean, maybe smaller, lower revenue business don't need this, and we have a lot of commission. Like we pay commission out for most of our employees, so we have a pretty complicated system. But I think our bookkeeper, she and my director of ops meet every single week
Mm-hmm.
and go through everything. And then once a month I get on the call because it's just complicated. There's no way. I mean, that's like she probably
Absolutely.
spends 20 hours a
Especially
month
with
on our
commissions
stuff.
and people, and you got to
Yeah.
track a lot of things. If you do it, some people, I mean, it depends on the stage of the business, of course, on
Yeah.
the value and transaction. Newer businesses tend to not do it on a regular basis. So I got a lot of new clients that come to me once a year, and then we do the bookkeeping once a year. That's not a good thing to do, honestly. You don't want to find out your tax bill at the end of the year. And also for, planning purposes, projections and whatnot, you do want to keep track of it during
And
the year.
I found I've changed the person who did my books 3 times in the course of my business. And every time I changed, the next person who got elevated, right, in terms of skill, every time I changed as the business
Yes.
grew. And every time I changed, somebody had to redo something and it cost me a
Mm.
lot of money.
I can relate to that. I've seen those clients, new clients that come to me. It's common. I don't know why. Well, I do know why, because a bookkeeping profession is an easy entry profession. Bookkeeping is not taxes. You can learn things relatively quickly and start doing bookkeeping. So And you don't have to have any background in accounting or anything. So, but still, there are a lot of great bookkeeping professionals out there that are doing an amazing job. But to your point, yes, you might have to switch a few professionals until you find your own one that you really like and that does things the way they should be done. Next, let's talk about how much you can pay. It says up to 15,000. That's for 2025 because this is a standard deduction that is at the moment for 2025. However, can you pay more? Absolutely, you can pay more. You can pay your kids as much as they earn. Why 15? It says up to 15 because up to 15 is would be tax free. So when they file their tax return, if let's say they earn 20,000, you're going to see 20,000 as wages, and then you're going to see a deduction as a standard deduction 15,000. So they will pay taxes on the balance 20 minus 15, 5. They'll pay tax on a 5,000, but they won't pay tax on 15. Still good idea, of course, because back to our 37%, if you're in a 30%, 37% tax bracket, you're shifting now, not just 15, but 20. You're still, even though your kid will pay tax on that $5,000, that tax is 10% versus your 37% on that 5,000. And then again, the 15,000 will be tax free. So you're not limited to pay 15,000. You can pay them as much as they earn. But I'd like to mention that the 15,000 is a tax-free because it's a standard deduction. Also, must be reasonable for the work performed. Of course, this is, this is where you need to have good documentation. How did you arrive at what they are earning per hour? I have a tool and I do that for my clients. It's called reasonable compensation analysis. It's basically you're filling out the questionnaire either for yourself if you're an S corporation owner working in the business or C corporation owner working in the business, or if you have kids, underage kids that you would like to hire and you want to be very organized and ready for potential audit if it ever happens in the future. You want to be proactive and get the documentation and the right documentation right now. We do reasonable compensation analysis, and that's basically it's the documentation that proves why your kid earned, or yourself, if we're talking about business owner working in a business, why your salary is whatever it is. It has the statistics in your area. It has the, based on the job and the tasks that your kids or yourself do, how much it costs in your area. We're not talking to New York, for example, where the minimum wage is way different than in Texas, for example. Also based on the experience, somebody with 30 years of experience in the same profession would get more than somebody who just started out. So we take that into consideration as well when we do a reasonable compensation analysis. But the point here with the kids specifically is you want to pay them something that is relevant to their experience or lack of experience at this point, if it's their first job ever in your area, how much people in your area earn for this type of job. Think about it that way. If you were to hire somebody to do that job, how much would you pay them? So that could be like just an idea for you to understand on the wage requirements. But I would definitely make sure to have documentation. If you're doing it on your own, I would definitely have documentation. How did you arrive at the wage amount for your kids? Also, tracking hours, keeping time logs. Again, think about it as you have an employee. Would you have them keep their time logs and track their hours and what they do and when they do? Would you have the job work contract with them? Absolutely. So just because those are your kids working for you, it doesn't mean that you have to just disregard all of the other requirements that you would have otherwise. So, and especially with hiring new kids, that's very important because if you were to have an audit and they were to disallow that deduction, then you'll get penalties. You'll get a higher tax and penalties and interest for not paying tax that you should have paid
Katia, we were
whatever
just
years
talking
ago.
over here.
Yep.
Cheyenne, who's our producer on this, she does all the editing. She actually, her daughter's 15 and she's employed her daughter too.
Awesome.
And what does she do for you, Cheyenne?
She helps with a little bit of graphic design and even just resetting up templates or emails to people. Like, it's very basic stuff, repetitive things where there's like a system.
Yes.
Yeah.
Yes. Well, especially at 15, that's a good age. That's, you can teach them anything at that age.
Yeah. Yeah.
and anything related to social media content and everything in that industry, they're way better than us.
Yeah.
I'm sure.
Yeah.
Well, the kids these days, they definitely they have a future ahead of them in all the technology related things. And the last point is consider using W-2 payroll system if necessary. Yes, it is kind of necessary because you got to pay them payroll. So if you already have a payroll provider, there are different payroll providers out there. Just add them to that payroll provider. Next, that's the documentation I just mentioned. Employment agreement, job description, timesheets, logs, payroll records, payment. It says check, but it's not like a check, just a check like 1099. It's either direct deposit or a check, but it has to be payroll. It has to be W-2 position, not 1099, not independent contractor. Independent contractor, that's a common mistakes I see. And those are after the fact, meaning new clients come to me when the year's over and they say, I wanted to use this strategy and I paid my kid with just a Zelle, send them a Zelle or issue them a check, but they did not do a proper payroll. It's really no point of doing that because now they have to pay self-employment tax. You're not really saving any money. You're just creating a little bit of a headache with that payment method that you are using. So definitely W-2 and not 1099 for this specific strategy. What to do with the income? Great things can happen in the future for your kids. Roth IRA is one of the things that is powerful for when you hire your kids. You might be aware that you cannot contribute to Roth IRA if you don't have earned income. Earned income is either W-2 income or if you have a business. So it's basically not a passive income. So, and kids usually don't start working until a certain age or after college or whatnot, or during summer breaks. So if you're hiring your kids now, it's not just for the tax savings purposes to lower your bill, but it's also for their future. As mentioned earlier, you can now open Roth IRA for them so that they can contribute because they can only contribute if they have earned income. So now you hire them on W-2 and they are eligible to contribute to Roth IRA. Roth IRA is a post-tax deduction, a post-tax contribution. So what it means is it doesn't give you any benefits now. But whatever you withdraw in the future, assuming all the requirements are met, certain age and whatnot, then everything you withdraw from there, included the earnings that were generated over the years, will be withdrawn tax-free. So your kid is not paying any tax on it right now if you're paying under up to 15K. You don't pay tax on it because you're deducting that 15,000. Then your kid doesn't pay any tax on it because the income up to 15,000 is not taxable. Then you put that money, not the entire 15. There's an annual limit, 7K. So you put the 7K now, and then whatever grows in the Roth IRA for the next 40, 50 years, whatever you take out at the time is tax free. So basically, that money has never been taxed, and whatever you will be withdrawing in the future from that retirement account will not be taxed at all. And if you Google how much your 7,000 can grow into 40 years compound interest, last time I checked, it was suggested like if the compound interest is 7%, and I think I did 40 years, the 7,000 now will generate about K in 40 years of 7% compounded interest. That's amazing because we just created 160K out of nothing pretty much. Not out of nothing, of course, but you're contributed now 7K, and that doesn't have to be an annual contribution. That's 160K that I just mentioned. It's a one-time contribution. We're doing it this year. We are not contributing anymore, and just that 7K will grow into 160K in 40 years. That's amazing. And then you can spend money for college or for college fund. For example, 529. You might be aware that you can, the 529 in Texas, for example, it's not a tax deduction. So you're just contributing money out of your own pocket because out of your own pocket that you already pay taxes on. So you're not getting any extra deduction. But if you pay your kids, you are getting that deduction. Now you're taking the same money and contribute to 529. So now you are getting a tax benefit out of that. If you didn't hire your kids and you just contributed for 529 plan, then you don't get any benefits. So, and there's other things. For example, have them pay for school. Yes, there is a tax credit for aftercare, for example, or summer camps and whatnot, but there's no deduction. Let's say if your kids are in a private school or even for extracurricular activities, you can deduct it. It's not a tax deduction, but it could be an indirect tax deduction if now you're hiring your kids, you're paying them wages, and now they're using that money to pay for those expenses. So you see, we're creating a deduction that wasn't there to begin with. And that's amazing what you can do with that strategy. And by not just looking at, okay, I'm going to save $5,000 on this, we're looking outside of just that tax savings. What else can be done? It's not just the tax deduction, it's the investment in the future, Roth IRA, 529 educational college funds, paying for things that you are paying anyway, but you are not deducting it as a business deduction. And now all of a sudden, we are creating that deduction by hiring your kids and using that income to pay for those expenses. All right. Common mistakes to avoid. Well, the first one is very obvious, but I've seen that, so it's worth putting it on the list. Paying for chores or non-business work.
So you're saying I can't hire Harrison as my muse because I said I thought maybe I could do that. He's cool.
Yes, no, I can't. I wish I could hire my 5-year-old to do tax planning for me, but
Yeah.
or any other things.
Not a muse. I mean, he's at our office all the time, right?
Tell me about it. So no, unfortunately, we can't. And again, it has to be a legitimate work. We can't just put them on a payroll because if we have an audit and we don't have any proof that they worked actually, as all the documentation and other things that we discussed before, then bad luck for you. So definitely legitimate work, definitely business related. And again, it doesn't have to be anything specific. There's no requirement that the kids can only do XYZ, but not, whatever else. So you choose what needs to be done for your business. You hire your kids, you train them if you need to, or you pay for the training and they do the work and you keep all the documentation, time logs, days they worked, contract, job, work contract, and whatever we discussed earlier. So definitely be proactive with everything. Don't put it on a last of your priority list because you want to have that gathered as you go and not 3 years down the road if you ever have an audit. Also mixing personal and business accounts. By that, I mean, you don't wire yourself money for their salary. It's ideally they have their own bank account and you send the salary to that business bank account. And also you do need to pay them. It's not like, oh, I'll just pay for your college, or I'll just pay for this and that. I'm not going to transfer money. It doesn't work that way. You have to treat them as if they are an employee from outside of your family. When you hire somebody, you got to pay them. You got to transfer money to their bank account, not your bank account. And then the last point is, well, actually, sorry, paying too much for simple tasks. Again, that goes to the reasonable compensation analysis that I mentioned earlier. The pay has to be appropriate for the tasks they do, experience, education, whatnot. So think of how much you would pay somebody if you were to hire them to do the same tasks that your kid would do. And the last point is not filing proper payroll forms. I wouldn't worry about it at all if you have a payroll provider, because payroll providers do that for you. So if you add your kid as an employee within your payroll provider system, they will file all the reports, quarterly, annual, W-2, and everything else that is required. But it's worth mentioning just in case you are doing your own payroll. Repetition here, but very important. So I'm not going to list that again, but documentation that you need, do consider that as you go through this process. And we're coming to an end. So definitely this is a great strategy if you have kids, and or if you have relatives that you support, that you can hire now and pay them that, so to speak, support, although we wouldn't call it support. Again, they have to be doing legitimate work. So you can do that as well with the relatives. You must follow IRS guidelines. Please keep all the documentation. And if you need help, I am available. Let me know, or speak to a tax advisor if you have one, and talk about this strategy and how that can benefit you in your specific tax situation. And
I love this. And I also am just so surprised that you don't hear other people talking about this. And then I bring it up and they're like, oh, yeah, I do that. I'm like, why don't you people share these secrets? Why don't you share? So, Katia, thank you so much for sharing this information with us. I know, so when we do this, our goal is to provide information to our small business clients, and if they're not clients, whatever, small business owners, on just helpful things. And I think that this one is huge. And I highly, highly recommend any of you guys out there give Katia a call if you are looking for someone who is strategic. Like we talked about, most people just file taxes. And the more taxes you owe, the more you are seeking someone. I think as you're growing a business and as your revenue increases, the more you need strategy. And the more taxes, the first time you pay that really, really, really big tax bill and you want to like pass out when you see how much money you owe in taxes, you will realize how much strategy you need. Yeah.
I agree with that. Thank you so much for having me, Leslie.
Yeah, absolutely.
Thank you so much. And I'm happy to help you guys. If you need any help, let me know. My contact information is on the screen, and happy tax savings.